Imagine this for a moment. It's a quiet Tuesday morning. You're sitting at the kitchen table with a cup of coffee. The mail just arrived. You sort through the usual bills, the flyers, the coupons, and then you see it, a white envelope. Return address, Social Security Administration. Your hands shake a little as you open it, and there, in plain black ink, are words that make your stomach drop. Notice of overpayment. The letter says you were paid too much. It says you owe the government money back. Maybe it's $2,000, maybe $7,000, maybe more. And buried in the fine print are two words that turn your blood cold. Full withholding. That means your entire monthly Social Security check, the check you depend on to pay your rent, your groceries, your medicine, could stop, just stop, until that debt is repaid. You read the letter again, and the questions start flooding in. Did I do something wrong? Did they make a mistake? Can they really take my whole check? How am I supposed to live? If this has happened to you or to someone you love, please take a deep breath. You are not alone, and more importantly, you are not powerless. My name is June. I'm a senior policy analyst, and I've spent years helping retirees just like you understand the rules that quietly control your retirement security. In the next few minutes, I'm going to walk you through exactly what this overpayment letter really means in 2026. I'll show you the precise deadlines that matter, the official forms that protect you, and the 3 actions you must take to keep your check safe. And please, stay with me until the very end, because there is one hidden mistake almost every senior makes when they get this letter. It's a mistake that can cost you thousands of dollars and your monthly income. I'll tell you exactly what it is and how to avoid it. So pour another cup of coffee, get comfortable, let's protect what you've earned. Let me tell you about Robert. Robert is 67 years old. He lives in a small house in Ohio with his wife, Linda. He worked for 42 years as a maintenance supervisor at a local school district. He paid into Social Security every single paycheck. He retired at 66 and started collecting his benefits, about $2,100 a month. Robert is a careful man. He pays his bills on time. He keeps his receipts in a shoebox in the closet. He's the kind of man who reads the instructions before he opens the box. Last spring, Robert took a small part-time job at the hardware store down the street, just 12 hours a week. He liked staying busy, and the extra money helped with Linda's prescriptions. But Robert made one small mistake. Just one. He didn't report his new earnings to Social Security right away. He figured he'd take care of it at tax time. After all, the IRS would know, right? It would all work itself out. 11 months later, Robert got the letter, $7,240. That's what the Social Security Administration said he had been overpaid. And starting the next month, they were going to withhold 100% of his benefit check until the debt was paid back. 100%, his entire Social Security check. Gone. Robert sat at that kitchen table and felt his whole world tilt. He and Linda had a mortgage payment due in 3 weeks. Linda's heart medication cost over $400 a month, and now their main source of income was about to vanish. Here's the thing about Robert's story. He had every right under the law to fight back. He had real powerful protections, but because he didn't know the rules, he almost lost everything. I don't want that to be you. So let's talk about exactly what changed and exactly what you can do. Here is what you need to understand about Social Security overpayments in 2026. On March 27, 2025, the Social Security Administration made a major change. Before that date, if you were overpaid, the agency could only take back 10% of your monthly check. That was the cap. It was manageable. It was survivable. That cap is gone. For any overpayment that happens on or after March 27, 2025, the default withholding rate is now 100%. That means your entire monthly Social Security retirement, survivor, family, or disability check can be withheld until the debt is repaid in full. Now, I want to be very clear about a few things, because there is a lot of misinformation floating around online. First, if your overpayment happened before March 27, 2025, the old 10% cap still applies to you. You do not need to take any action. You keep that protection. Second, if you receive supplemental security income, which is different from Social Security retirement, the 10% cap still applies. SSI recipients are still protected at 10%. But please understand, SSI and regular Social Security retirement are 2 different programs. Don't mix them up. Third, the Social Security Administration estimates this change will recover about $7 billion over the next 10 years. That's the $7 billion you may have heard about in the news. It is not the amount any one person owes. Individual overpayment amounts vary widely, from a few $100s to tens of thousands. Now here is the most important part, the part that can save your check. When you get an overpayment letter, two clocks start ticking, and almost everyone confuses them. The first clock is the 30-day clock. Social Security will wait at least 30 days from the date of the notice before they start collecting. If you file an appeal or a waiver request within those 30 days, they cannot touch your check while your request is being reviewed. Your benefits stay safe. The second clock is the 60-day clock. You have 60 days from when you receive the letter to file a formal appeal challenging whether the overpayment is correct. Listen carefully. 30 days to stop collection, 60 days to preserve your right to appeal. If you wait until day 45 to file, you still have appeal rights, but the agency may have already started taking your check. That's the trap. That's what almost no one explains clearly. Now let me tell you about your two most powerful tools. The first is Form SSA 561. This is called a request for reconsideration. You file this when you believe the overpayment is wrong. Maybe they calculated it incorrectly. Maybe you don't believe you were overpaid at all. Form 561 says, I disagree with this decision. Please look at it again. The second is Form SSA 632BK. This is called a request for waiver of overpayment recovery. You file this when you accept that an overpayment happened, but you believe it was not your fault, and paying it back would cause you serious financial hardship. There is no deadline to file a waiver. You can file it at any time. And there's a third form many people don't know about, Form SSA 634. This is a request for change in overpayment recovery rate. If the overpayment is real and you don't qualify for a waiver, but losing your entire check would devastate you, this form lets you negotiate a lower monthly recovery amount based on what you can actually afford. There is also one very important change from a 2024 reform that is still in effect today. The burden of proof has shifted. In the past, you had to prove you were not at fault for the overpayment. Now, the Social Security Administration has to prove you were at fault. That is a powerful protection. Use it. So, what should you do right now? Let me give you 3 exact actions. Write these down. Step 1. The moment you receive any letter from the Social Security Administration that mentions overpayment, write down the date on the letter. Then add 5 days because the agency assumes you received it 5 days after the date printed on the notice. From that day, count forward 30 days and mark that date on your calendar in bright red ink. That is your protect your check deadline. Then count forward 60 days and mark that one too. That is your appeal rights deadline. Step 2. Do not call the 1-800 number first. Instead, go directly to SSA.gov and download the correct form for your situation. If you believe the overpayment is wrong, get Form SSA 561. If you accept the overpayment but cannot afford to pay it back and it wasn't your fault, get Form SSA 632, BK. If you just need a lower monthly recovery amount, get Form SSA 634. Fill it out carefully. Make a copy for your records. Then submit it before your 30-day deadline. You can upload it through your My Social Security account online, fax it, or mail it to your local office. If you mail it, send it certified mail with a return receipt. That receipt is your proof. Step 3. Keep every single document, every letter from Social Security, every pay stub from any work you did, every bank statement that shows your deposits, every receipt for medical expenses, rent, utilities, and groceries. If you need to prove financial hardship for a waiver, those documents are your evidence. If you need to challenge the overpayment amount, those documents are your defense. Put them all in one folder, label it clearly, and keep it somewhere safe. Now, the hidden mistake I promised to tell you about. Here it is. The biggest mistake seniors make is confusing a waiver with an appeal and filing the wrong form. If you file a waiver when you should have filed an appeal, you are essentially admitting the overpayment is correct. You lose your chance to challenge whether you actually owe the money at all. If you file an appeal when you should have filed a waiver, you may win your appeal. But if it turns out the overpayment was technically valid, you've now used up your time and you may face full collection anyway. The rule is simple. If you think Social Security got the numbers wrong, file Form SSA 561 first. That's your reconsideration. If reconsideration confirms the overpayment is real, Then file Form SSA 632BK for a waiver based on hardship and no fault. 2 different forms, 2 different purposes. Get this right and you protect yourself fully. And one more thing. Robert, the man I told you about earlier, he did finally figure this out. He filed Form SSA 561 within 28 days. The Social Security Administration reviewed his case, recalculated his earnings, and the overpayment dropped from $7,200 to about $1,800. He then filed Form SSA 634 and negotiated a recovery rate of just $75 a month. His Social Security check kept coming, his mortgage got paid, Linda got her medication, he didn't get lucky, he got informed. That's the only difference. Before I let you go, I need to say something important, and I need you to hear me. Please do not rely on YouTube notifications, Facebook posts, or forwarded emails to keep you informed about your Social Security benefits. The rules change. The deadlines are strict, and the consequences of missing them can take away the income you spent a lifetime earning. If you got value from what I shared today, please subscribe to Retirement Tax and Law Pro and turn on the notification bell, because we cover these critical updates every single week. But more importantly, bookmark SSA.gov. Save the phone number 1-800-772-1213. Visit your local Social Security office and introduce yourself. Build a relationship with them before you ever need one. And if you know another senior, a friend, a neighbor, a family member who depends on Social Security, please share this video with them today. The 5 minutes it takes them to watch this could save them thousands of dollars and protect their monthly check. You worked your whole life for these benefits. You earned them. Nobody, not even a government letter, gets to take them away without giving you the chance to fight back. I'm June with Retirement Tax and Law Pro. Stay informed, stay protected, and I'll see you in the next video.